so welcome back to this week's weekly webinar. I'm Jason Yarusi of Yarusi Holdings, where today we're going to talk about all the happenings out there in the market, and it has been interesting. But before we do that, if you'd like to get these weekly updates about what's happening out there in the market, talking all things multifamily investing and more, make sure you go down there and hit that follow button. So, Jason Yarusi, Yarusi Holdings, we're a multifamily investment firm here in Middle Tennessee, looking at always acquiring properties that have the potential to, of course, increase value and create great opportunities for our investors. But that said, let's talk about what's been happening out there. And it has been interesting. So I'm sure unless you've been under a rock, you have heard of the bank collapses, the number of things out there. And okay, so let's assume that you've seen that, right? So where do we go from here? Well, ideally, it's to be seen. Banks on their own side are going to have a hard time stretching their limits, right? So we've already had this uncertainty out there in the market, and now we couple that with more uncertainty, and the banks being uncertain, they want deposits, right? People aren't putting money into the bank, they're actually pulling it out. So if we look at this trend here, banks, for us as looking for lending opportunities, are going to potentially tighten their reins. So with that said, it's going to make some of the opportunities that we've been continuing to look for even harder to get across the finish line. Now that said, there are many different types of banks out there. There's many different types of people that you can communicate with that are still going to be lending. But if you have your local banks, your regional banks, they're going to feel exposed right now, because what just has never happened in the past was the speed that you can withdraw your money. So think about the last few years, right? We saw COVID happens, everybody gets locked down. We have this point here where a bunch of money gets put into the market here. They print a bunch of money to hopefully help people out. That money finds itself back into the banking system. So at that point, we see a lot of money linked out there into the market or put out there into the market. However, with where we've gone into inflation, things are costing more here, and then rates are going up, people are pulling their money out, right? So what we saw at SVB is that all these venture firms, right? All these ventures are out there pulling money out because their burn rates going quicker than the money they're bringing in, and they're not raising capital, right? So that's bringing down deposits. And in the long term, we typically have these treasuries, right? Where you're putting money in the treasuries, it's a safe investment. However, in the short term, if short-term rates, right, if it costs more today to borrow, right, then it does on, of course, what you can get on the long run, it's ultimately going to affect you, right? So when we see this, SVB got exposed where ideally their risk management just was off, because who could have determined that we were going to increase rates at this fashion here? So it pushed them to the brink here, where they're basically selling bonds that were selling at 60-70% discounts right here, because who's going to want to take this bond on, where before they're getting 1 or 2% on these bonds are taken off, and today you can get 4.5-5% on that same bond, right? So people pulled their money out very quickly, because you can just go to your laptop today, hit a button, transfer your money. Before, 100 years ago, you would have to, tell your neighbor, hey, I think this problem's happened at the bank. You would go down to your bank in your little buggy or your horse, stand in line. And at that point, you'd be in line at the bank, hoping to get to the teller window to say, hey, I want my money. Well, within that same time frame for which you've gone down there, we had billions and billions of dollars being pulled out of banks. So these local banks, our local banks here, regional banks all around, are worried about that same thing right now, because people can very quickly get scared and fearful that the same thing could happen to them. And we've heard, of course, that we are backstopping deposits, but they're not going to do that over the FDIC rate for all banks, right? So these banks are feeling, shaky. So with that said, they are going to be more critical of their lending, who they're lending to, how they're lending, and their parameters. Where before they may have opened or moved boxes around to be able to lend to different people. Well, today they may be more picky, right? They may not want to be exposed in certain business or certain asset classes over to a certain limit. They may not want to be exposed more than a certain amount to certain individuals. They may be more picky to just loan to people that they have a pre-existing relationship with. All these things coupling with interest rates now continuing to go up, right? We just had another 25 bips that have increased in the market here based on the Fed meeting just last week. And that said, we're seeing prime now going to 8%, all these other things factoring in that it's going to be harder and harder and harder to get rates to make sense for our real estate projects. So what can this lend, right? As a real estate investor, you could look to continue to have a number of conversations with banks to understand what kind of opportunities could be out there and what kind of loans can be available. You can talk with the seller, right? The seller may need to come out on price and be open to that if they're open for that price discovery, which they may or they may not, depending on their situation. Or other piece, maybe they will be open to offer some seller financing if really their basis is very low, because that could still give them some kind of coupon, limit their tax exposure, and at the same time give you better terms than you're going to get in that bank today. So there's always paths, there's always opportunities. These are the times, anytime is a time that you can find good opportunities, but you have to think about, what's my business plan? How can it benefit? How can it put me in the best position to win for myself and my investors, create the most sustainability for my project, and continue to power us forward as real estate investors? So again, I'm Jason Yarusi. If you like these, let's go down there, hit that follow button, make sure you're keeping in the know here, and look forward to talking to you next week. Thank you.